everyone, it's ReAnn Gonzalez with Edge Home Finance here in El Paso. If you've been feeling like home prices got ahead of you the last few years, listen up, because the rules of the game just changed a bit in your favor. Okay, so now let's get into it. FHFA announced last week the new 2026 conforming loan limits. In plain English, that's the maximum loan size Fannie Mae and Freddie Mac will buy as a normal conventional loan before you jump into jumbo territory. For most of the country, that new 2026 limit is $832,750. which is $26,250 higher than this year's cap of $806,500. So, if you're a buyer, a homeowner thinking about a move up, or a real estate agent writing offers in that higher price range, this matters to you. Let's break this down really simply. A conforming loan is just a mortgage that fits under the dollar limit for the year and meets standard guidelines on credit, income, and down payment. If you go over the limit, you're in jumbo loan territory. Jumbo loans can be great in some cases, but they usually come with stricter credit requirements, larger down payments, and sometimes tighter underwriting. So, staying conforming when you can is often easier, cleaner, and sometimes cheaper. Here's what that new $832,750 number means in real life. If you're putting 5% down, you can now buy a home around the mid-800s and still stay in conforming territory instead of jumbo. In a lot of markets, that might mean moving from a starter home into your long-term family home, or staying in a better school district, or buying a newer build instead of settling for something that needs a ton of work. For agents, this is big for your pricing strategy. That buyer you thought was going to need a jumbo loan to compete at a higher price point, now they may be able to write offers that still fit within conforming guidelines. You can go a little higher in price and still keep the financing in that sweet spot. It's not magic. It doesn't fix affordability overnight, but it does give you more room before you hit that jumbo wall. Now, let's talk about something close to my heart here in El Paso and our military communities. VA buyers and using your VA benefit more than once. One of the biggest myths I hear is, I already used my VA loan once, so I can't use it again. That is not how it works. Most of the time, you can use your VA benefit again after you sell and pay off the old VA loan. Or sometimes you use it while still owning a VA financed home, depending on your remaining entitlement and the numbers. Think about active duty families PCSing into Fort Bliss or another base. Veterans who bought a starter home years ago and now want a bigger place for their family. Or someone who wants to keep their current VA home as a rental and buy again in a new city. Here's where the higher conforming limit ties in. VA doesn't technically follow the same conforming limits anymore, the way it used to. But those numbers still matter in the background when we're talking about entitlement and how much we can safely approve without you getting in over your head. Bottom line, higher limits plus smart use of your VA entitlement can open up more purchase power, or give you options to own 2 homes at once in certain cases, one to live in and one as a rental, if the math and your budget support it. But you absolutely need someone who will do the math right and tell you the truth, not just throw out a pre-approval letter to make a sale. Agents, here's where you come in. If you work with move-up buyers in that $650,000 to $900,000 range, military families relocating, or veterans who already used VA once, you should never assume they're maxed out. Or we have to go jumbo now, or they can't buy until they sell. Send those scenarios to me before you write the offer or list the home. I can run the numbers with the new 2026 limits. Look at VA entitlement and give you a clean plan. Here's what they can do now. Here's what they need to fix, and here's the price range that keeps this deal safe and solid. So, to wrap this up, conforming loan limit for 2026 is now $832,750 in most of the country, and most lenders are already accepting that loan amount. That gives conventional buyers more breathing room before they're forced into jumbo. And for our VA community, it's one more tool we can use to help you move, upgrade, or invest, sometimes even while holding on to your current home. If you're a buyer or homeowner wondering, what does this mean for me specifically? Message me with your approximate price range and whether you're conventional or VA. If you're a realtor, send me your next borderline jumbo or used VA already client. Let's structure the financing right on the front end so your contract is strong and we don't get surprises in underwriting. I'm ReAnn Gonzalez, your local mortgage broker, licensed in Texas, New Mexico, and Florida. And I'm here to help you and your clients use these new 2026 loan limits wisely.